Hello traders, and welcome back to Trading with Bill, Forex and Options Traders. Great to be with you. It is a Wednesday, September 9th, 2015. Traders, great to be with you. Coming to you live from Thailand. We're about, 2.5 hours into the London session as I'm recording this. It's great to be with you. Absolutely beautiful day today. Bright blue sunny skies, white sandy beaches. But more than that, it's a nice cool breeze. Having a great day today. So I'm going to take a look at a bunch of charts today, both option charts and Forex charts. And we'll get to commentary in just a moment. However, let me introduce myself to you. My name is William K. Gilday, and yes, they do call me Bill. And this is Trading with Bill, helping losing traders become winning traders. And that's the whole idea, is that as a group that we can come together and we can come up with formulas and trading ideas where we can help each other so we don't take losses. And if we take losses, we take very small ones. All right, what can I tell you about myself? I started trading in 2006, and in 2008 I retired from a wonderful firefighter paramedic career in the great state of Florida. Traders, 9 days later, I came to Thailand for a 3-month holiday. Well, it's 8 years later, and guess where I'm still at? I'm still in Thailand, and absolutely loving living in Asia, especially if you're a trader. And I do trade Forex and I do trade options, so I can basically trade all 3 sessions and still get a good night's rest. However, in New York, I only trade about 3 hours because that puts me up to about 11 p.m. And no traders, I am not in front of my charts from 7 a.m. in the morning till 11 o'clock at night. I do take breaks. I do get 2-hour breaks here, an hour break there. If I want to go somewhere, I go. You know, that's the advantage of trading. That's why I have an iPhone. I just bring my charts up on my phone and see what's going on. Makes it a little bit easier. I do need to be in front of my big computers when I place my trades. All right, let's get the legal stuff out of the way. Not that anybody from the CTFTA, FCC, are going to come by and get me from the States, but we'll do the risk disclaimer. Forex and options trading has a large potential, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex and options markets. Please do not trade with money you cannot afford to lose. Traders, most importantly, past performance of any trading system and methodology is not necessarily indicative of future results. All right. I think probably more important than that is don't trade with money you can't afford to lose. You know, like don't put your mortgage money into a trade. You know, that's like kind of crazy. And this slide is this slide's in the wrong position, my friends. Thank you for being here, though, and you can always get me at tradingwithbill.com, and you can follow me on Twitter at WKG1960. And again, thanks for being with me today. I appreciate that, and I really think it's great. And please respond with me. Send me messages either from my website, from the YouTube page, however you want to do it. It's really great to hear from you. Good news or bad news, I got some thick skin, and we just want to make it better and a better video every single trading day. All right, let's get on over to commentary. The markets are, I guess unstable would be the polite way of saying it. You know, we were off on Monday. There was no New York session. I come in on Tuesday to find that my FXCM trading platform is having all these problems, and I'm on, at this time, with support from FXCM. Now, I do have to give them credit. They don't hang up the phone. They don't say, I'll call you back in an hour, or we'll email you, or if you get somebody in support, they are on the phone with you till they resolve the problem. And my hats off to them for that. But it was close to 2 hours, and we did get the issue resolved. I did have to do a lot of work to get my charts back because I lost all my data. So I had to redo everything, but that's okay. The commentary today basically is, I'm going to show you a bunch of charts today, and we're going to go through them, and we'll go through them, you know, at a pretty reasonable pace because I really want you to understand this stuff. And this is what keeps you out of trouble. And today you're going to see where, even in the options trades, where it's just like there's no consistency in anything. In nothing, there's no consistency. At 7 a.m. this morning, when I opened my charts and I looked, and everything was like reversed. You know, like the euro was above 1,200, the pound was, you know, close to 5,400. All these things were just out of whack. The euro yen was up. I mean, the euro yen hasn't been up in like, since like weeks. It's just, but everything's just been out of whack. So we're gonna start, and we're gonna do basically what I do on a daily basis. And I always go through my higher time frames, and I wiggle my way down to the time frame that I'm going to trade. There's a lot of lines on this chart, and let me bring that over to you. And this is the Euro USD, and this is the daily chart. This is my live trading platform. Okay, so there's no surprises here. These green and these short lines that do not come all the way across the chart, those are support and resistance lines. That's a product that FXCM has as an add-on, and you have to purchase that. And it just makes it easier for me to spot support and resistance really quick without me having to do it. Below that is RSI, and below that is new to my charts. It's another add-on that you have to purchase, of course, but really the money is not the issue. It's a strength indicator, and I read an excellent book over the weekend, and I have to tell you folks, it was on options, and it was a great book. And I saw an excellent video the other day over the weekend, and just did so much Forex homework this weekend. It was absolutely great. And there were just some things in there that I learned that I'm applying to my trading, and it's just awesome. So if we take a look at this euro dollar, and this is a daily chart, what do we see here? Well, what I see here is we're in this nasty range. It has no clue what it wants to do. Is there a dollar strength there, or is there a dollar weakness there? Well, if you look all the way down on the bottom of the chart there, and you look and see where it says JPY, well, if you go under that, and then you're going to see 3 lines there. Well, that bright red line, guess what that line is? That is the dollar, and that's just above the 0 line, right? And that's with the CAD and the euro. So there's no strength and there's no weakness in the dollar. The dollar is just sustaining. It's not obtaining anything. This is a nasty looking chart, right? We can come to that and just say this is a nasty looking chart. And I can see I made a mistake on the next chart, but that's okay. And this is the euro dollar on a 60-minute, and this is not brought all the way over. I apologize for that, but it's in this range, and you'll see it here on the next chart. But again, these are the support and resistance lines. This is the RSI, which you guys have known about, and this is the lines that I was telling you about. That's basically strength meter, just gives me strength. And you can see over here, this is the USD, is bright red, and where is it? It's in a mess with the euro and the pound. They're all in here in this mess, right? And they're all entangled into here. So there's like nothing going on, right? So let's come back down to reality. So I take a look at all this. Now here's a yellow trend line. So this is from this 1 hour chart, right? This is a trend line from the 1 hour, and this gray line is from the daily, okay? This gray trend line that you see here, that was put on there. Remember, I color code everything, so I know when I have a trend line what time frame it's from. So I can go back to that time frame and look at it, right? Isn't it horrible when you have trend lines and channel lines and all that stuff on your charts? You have to love your charts. If you don't love your charts, you're going to hate trading. If you don't like what you're trading on, change. There's gazillions of charting packages out there, and the convenience of me trading with FXCM's Microscope 2.0 is that my live account is with them, and I can trade right off my charts. And that's the whole object, is simplicity. I try to make things easy. I don't want to have to be looking at another charting package and then going back to trade off my live chart. I like having everything in one box, sort of say, right? Okay, so here we are. This is the Euro 30. This is today, right? So here we are. And again, if you look at the bottom of the chart there, the only thing I like is I like that bend on the RSI. It's coming back down to the 0 line. That's pretty nice, because I'm bearish in the euro dollar. I'm sure not bullish in the euro dollar, but the euro has made its way up there. There you can see where it spiked to 1200. That's what I was talking about. And if you go all the way up, this line up here, this spike and these red bars here was what I opened my charts up to in Asia. Okay. So we were above 1200, and then of course it sank, and now it's back up there again. And now we have a 200 exponential moving average inside a 50 and a 21, EMA all tangled together, right? So there's no separation of the EMAs. We're in this, I don't know, I just scored a nasty range. I mean, that's the best thing you can call it. And it's verified by my strength meter down on the bottom. This is in a nasty range. There's no separation. There's no anything. It's just looking horrible. Okay. So what do you do with this? Don't trade it. Just don't trade it. I haven't shown you a chart yet that said take a trade. Okay. And that's the important part. This. We've got to get out of this range thing. And as more people come back from holidays and the markets get more volatile, now the big weight is the Fed going to raise interest rates? You know, I listen to another trading room, and it's no secret. I listen to Wise Trading. If you Google them, just put Wise Trading, look for their. It's free, and they have a trading room during the European session, and you know, the guy in there is really cool. He's actually in Hawaii, so it's pretty interesting conversations we have. But you know, if you go in there and you listen, you know, the big news is that they're saying, oh, now the Fed is definitely not going to raise interest rates. Well, I think you got to have big cojones to turn around and say the Fed's not going to raise interest rates, because I don't think anybody knows except for Janet Yellen and probably her husband and her kids if they're going to raise interest rates or not. I mean, really, I think that's what it comes down to. And we have a week, you know, 9 days before we're going to find out if they're going to raise interest rates or not. It's like really crazy. It's absolutely berserk. But it is what it is, right? And I would love to be in a euro short from like 1282. I'd love to be in a short from here going into that data, right? So if I got into a short or 1250, even 1250, right? Break out of this, come up to 1250, and then, you know, get some dollar strength and just sell this thing. Be down here when the news data comes out, and then we'll just take it all the way down to 1100. I mean, that would be a great trade plan. You know, that's what you would like, but that's not what I'm seeing. I see that this is going to be stagnant until this data comes out, unfortunately. So here's the pound dollar, and the pound had data today. And what happens? Data comes out, and there's the red candle. I don't know. What is that? That's it's like 35 pips, I guess, and then headed back up again. So, you know, it had like 4 pieces of very important data come out, and it was bad. It was all bad data. You would have been better off trading the dollar yen, and you would have had a much better. You would have made a lot more pips. I did grab 10 pips on this, by the way. I scalped 10 pips, put it in the pip bag, and that was it. I was bad. I was basically bored to death and just had to do something. So once the data came out, it was so bad, and it broke this 50, this little blue line here is the 55 EMA, and once it broke that, I just took that down here for 10 pips, and that was the end of that. But, you know, that's really not considered, I call that a trade, I call that just messing around. But yeah, you know, it was like hardly anything. But, you know, you can't trade this. This is in a nasty range. It doesn't know if it wants to go up, if it wants to go down, or what it wants to do. All right, let's take a look at the dollar yen. Here's the dollar yen. This comes all the way down. Nice red candle there after the data. And I just took this probably about 20, it's about 20 minutes ago. I took the snapshot of this. So, and this is an hourly chart. Okay, so yeah, so this data comes out, and this dollar yen gave you more pips than the pound did. But it was bad data out of the pound, and I just looked at the dollar yen, you know, and afterwards and said, wow, should have traded the dollar yen. I would have been better off. But, you know, people, I get really bashed with my support and resistance lines. But I'll tell you, if you fib this stuff, it's amazing how close these support and resistance lines come to things. And then you see this, right? This comes up to this resistance line here, right? And it reacts, you know. It's stuff like that that just bothers you. And then again, sometimes it doesn't do anything, right? Here it comes through. This is probably a data candle right through it, like melted butter. It just goes right through it. But, however, if you go left to the chart, look at how many times this thing hit the green line and price couldn't break through it. Now, that was probably an active zone between the closing in New York and Asia, I would suspect, if I had to take a guess. All right, that's it for Forex. So basically, Forex, just be really careful with your Forex trades. I don't see anything stable with Forex at all. So we go into options now, and I'm looking for this week's options, and I don't I don't see anything that I like. Here's IWM, and I wanted to take this trade, and what do I see? Well, there's a couple of problems here. One is here is the down candle, okay, which is fine. Then we get an up move. Then we get another up move, gives you a high low. Then we get the next day comes in, it's down, gives you an up move. It crosses, gives you a cross. Now we get a arrow indicating to head to the upside. So now I'm in this nasty range. Well, where are you going to do this on a weekly option? You can't. You cannot trade this on a weekly option, my friends. You have to end up going to a 30, 28-day, 34-day, 35-day trade, which is fine. I have no problem going into a monthly option. I have no problem at all with it. But I'm not trading a weekly option with something like that. So let's keep moving to show you some more crazy stuff. Here's our spiders. I trade the spiders all the time. I've done very well with the spiders. But again, here we are. We're all over the place. We are all over the place. In fact, if I've got this right, there's our down candle. Works. And then here's our up candle. So this was, these are dailies, right? So this is when we had the big fall, the China thing, right? This is the week, then it comes back down, then it comes back up. And yesterday was a big blue day on the markets. I watched the market open. One of the things I want you to take notice of is look at our market DNA. You can see where it hooks to the upside, right? And it does. I mean, it works. That indicator worked. That doji, and then you could have taken this up. So you would have taken like sell 190, sell 190 here, and and then buy back at a 187, right? As long as you stayed above 190, you're good, and it's a bearish call, right? So, and that would have worked fine, and as long as, like I said, as long as you stayed above 190, you're okay, and your insurance is like 188, 187, but that's not far. I mean, you got, well, sort of a double bottom, not really, but close enough. But what are you going to get for premium on that? You're not going to get a lot of premium on that for your credit spread, right? The object is we want premium on a credit spread, right? So again, on a weekly, you can't trade this. You just can't trade it. It's very hard to trade this on a weekly. On a monthly, you can probably play with it and say that the spiders is probably going to increase in time. This is the 200 exponential moving average, this magenta line here. So just keep that in mind. But just take a look at oil, just because it's the talk of the town, and we're back up to 46. Everybody laughed at me. People that I associate with the trading, and everybody laughed at me, and I said, I'm telling you, well, it's going to be back to 60 before you know it. And yeah, that's the 200 exponential moving average right here. And oil breaks. If oil breaks this line here, this red line here, and breaks it to the upside, yeah, I think we definitely gonna have some issues. That's a 55, I think, almost positive. That's a 55 EMA, and that breaks. That's gonna be quite a trade there. I would, you don't even want it. This is futures. This is oil futures contract. So you just want to watch out for that. But this DNA indicator is still to the downside, so it hasn't hooked yet. So I want it to hook, but it hasn't hooked yet. And isn't it funny that stochastics already has made the hook to the upside already, and our MACD is above the zero line. So it is what it is, right? All right, let's take a look at what I was looking at, taking a trade until I looked at it, and this is Boeing. Okay, this is Boeing, and I was looking to take this until I looked at it, right? So I was going to sell the 134 call. All right, I was going to sell the 137 call, which you can see. Sorry, the 134 call. All right, and I wanted to sell that. So that means that price needed to stay, profit. Price needed to stay below 134. Okay, and then at 137, I had my insurance in case it decided to make a move and take its way up to the upside. Well, I opened my charts just before, and here we are with this big, engulfing bearish candle, and I got an up arrow. So am I going to take this trade? Look where my DNA is. It's up, it's good, everything looks great, right? Am I going to take this trade? There's no way. We're at 133.82, so we're almost at 134. This doesn't expire until the 11th, okay, which is Friday. So I don't even have enough time. And if the market's open and have a green day today, it's going to hit my 134. I mean, we're right there. It's going to hit my 134, and it's going to pass it, and I'm going to end up being at a loss. So this weekly option I never took. It was all set up. You can see it's all marked. It was ready to go, but I did not take it. And that's the scoop for today, my friends. Again, we can just go back here. It's my mistake. I want to thank you, traders, for being with me today. And remember, you can always follow me on WKG1960 at Twitter, as I do tweet quite a bit. And traders, have a great trading day. Wow, this went a long time, 21 minutes, longer than I expected. Traders, talk to you tomorrow. Have a great one. Take care of yourself. And always remember to trade smart and not hard. Take care, traders, and be safe. See you now.